The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 10th, the terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. That's right. You can dial on in at 877-927-6648. If you can't dial in, that's okay. We've got you covered. Let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, in our Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading down 17 points, 26,819. S&P is off 7. NASDAQ 100 down 40. You've got the Russell 2000 up 1%. That's 15 points to the upside. New York Stock Exchange slightly positive. Semis are flat. Transports are up 108. So we've got a little bit for everybody. Spot volatility index is up 17 cents, still well below its 50-day exponential moving average. Gold's off 11 bucks, silver's up 1 penny. Light sweet crude is flat out there. So we're going to begin this afternoon session. I filled in for Larry this morning. I'll be filling in for Larry again tomorrow morning. So join me at 9 o'clock if you would. But there are a couple questions I did not get to, and I promised these folks that wrote in that I would during this show. So we're going to do that right off the bat. And Victor had written in, and he wanted my thoughts on UNG. That would be the long ETF for natural gas. And so let's take a look at the natural gas contract. Let's do a couple of different things. First, let's go ahead and pull up our 4 different time frames that we like to look at for its TAS market profile: 60, 120, the 5-hour, 300-minute, and then the daily set of the daily time frame out here. But on the daily time frame, we have both the daily, the weekly, and I also have the monthly set of profiles for the current contract for natural gas. So what is that we see out here? Well, first we see a breakout above significant resistance. That would have been the top of the daily. That broke out a few days ago. Top of the weekly, that was a few days ago. And then yesterday, top of the monthly profile, which would be 242. Is that right? Do I got that right? Do I got that? Yeah, I do. It's a brand new week monthly profile that formed this month in September. So looks like a fairly decent breakout. If we take a look at Stevie's other chart out here, where did I put it? Where did I put it? Natural gas, right here. Here we go. We take a look at natural gas. What do we see out here? First, there was a TD setup 9-count pattern that was in play. Yesterday was the high of that session, and we talked about this yesterday. We said, because Brent had called in from Martinez, California, we said the beauty is you're going to know whether there's a further breakout and a strong momentum move if we see the high of yesterday get taken out. Well, that took place. That when we see these 9 counts and they don't identify either a change in trend or just a sideways or hiccup-ish type move, but just a continue motor on, it's a real sign of strength out there. Today's wide-ranging bar is another sign of that. Now, what light sweet light sweet crude. What natural gas has to bust through, its next breakdown resistance area is at $2.81 out there. I don't have any indication that it won't be able to do that, but it is the next resistance level. And that being said, Victor, I'd hate you to chase it when you're up towards a resistance zone out here. So I'd say you're better off trying to buy a pullback. We should see a pullback in natural gas. The reason why I say that is because the oscillator and change line, the red-green line at the bottom of my chart, maybe a half a dozen days ago, flipped from red to green. When it does that, it tells us that the price oscillator, the difference between the 39 and 19 period, in this case here, it's a daily chart, so it's daily time periods, exponential moving average. That difference is what that line is taking a look at. And when it turns from red to green, it tells me that the price oscillator is just gone to zero or is above zero. And when you see that happen over the coming trading sessions, we don't know how many, but over the coming trading session, we'll see price and that line catch up to each other. So I'd say, Victor, you're coming into resistance, maybe resistance hold, maybe it doesn't. But at this stage here, what you'd want to do is buy that next retracement or pullback and see what kind of pattern might be forming at that stage. Right now, I don't have anything for you that I can hang my hat on, so to speak. Thanks for waiting so much for that analysis. If we go take a look at the other request that came in, this was from Craig, and Craig wanted to take a look at light sweet crude. So let's go ahead and put the October contract for light sweet crude. Here you're going to see your 60, your 120, your 5-hour, and your daily time frame out here. Again, with the daily and the weekly profiles and monthly, if it will populate for me. Here's what we do know about light sweet crude: is that yesterday, what price did was it broke a descending trend line. That trend line taking us back here, Craig, to the high on April 25th, and the next touch point really would be the high on July 15th. And yesterday was a close above it. Today was a test of that low and a rejection of that area. So this would say to both you and I that price wants to move higher when we take a look at light sweet crude. Now, it's tackling the bottom of its monthly profile, and that level is 57.90. We're at 57.81. So ideally, if you're long, you'd like to see price take that level out, close above that. Of course, it's a monthly profile. That means it would be for the month of September. But regardless, at 1:13 in the afternoon on September the 10th, you'd still like to see that area get taken out. Again, that number is 57.90. If I take a look at light sweet crude on my other set of charts, just look for any other patterns that may or may not be out here. Here is the October contract. What is it that we can see? We can't see... we don't see any topping signal. We do see the last time there was resistance. Here's your three-river evening star pattern. So that would say resistance in light sweet crude would be the high of that session being July 31st, and that high 58.82. The high here today, we saw a bit of a pullback, 58.76. Well, that's pretty close. Very close. So the next area, so you've got the monthly bottom of its, excuse me, profile. And then you have the last time where the bears showed up. Appears they're defending that territory, 58.82. A move above 58.82 ought to bring you into the 63.14, or most certainly the next prior resistance zone, 61.06. Stevie's red line is red, but prices above that, so you have a rising price oscillator that is below zero. So that's what that's what we see when we take a look at light sweet crude at this stage of the game. It is trying to break out above a descending trend line that has been in place since April of this year. This is Steve Rhodes with TFNN. We get back from this break. Let's go take a look at the markets. Why did the markets bottom this morning, and did they generate a signal for you? We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got a question inside the Tiger's Den from Peter from Park City, and he's asking about gold and asking what the charts are communicating to you and I right now. So if we take a look at the December contract here for gold, what we know is that prices closed below a key level of support. It is the bottom of the box. Now, many of you looking at this chart may say, hey, I don't even see the center line of the box out here. That's because it's tucked right in at the bottom of that box. That is at 1508.40. And so trading below that today is called bad news bears, not bad news for the bears. It really should be bad news bulls out here. Now, as long as price, Peter, stays below this area, 1508.40, this is telling us about a change in trend. Now, how do you and I know that? Well, if we take a look at when gold came off the bottom back here in May, what we can see is that we never saw it close below the bottom of the daily profile out here, with one exception, and that says that tomorrow, you know, so we wouldn't get a confirmation until tomorrow. That one exception was the trading day of July 1st, but the very next session, immediately price got back above that level, the bottom of the box, which was 1403.70 at that stage. And so the bottom of these boxes provided or have provided buying opportunities. That's the so-called buy the dip. Where's the dip? Where's the buy area? Well, the bottom of the box where you have buyers. Bottom is buyers, top is sellers, center is both buyers and sellers out there. So in this case here, a very strong level of support has broken. Now, what I'll do here is just switch from the daily to the weekly, because there's another key level out here that one should be, or people people should be taking a look at, and that's the weekly profile. And this is a brand new profile that is formed this week. So, Peter, the real key number is going to be 1489.20, just about 11 bucks away from where price is trading right now. The low so far that we've seen out here this week has been 1494.30. So watch the price level 1489.20. The daily's already given you the message, given us the message. But nonetheless, we have to be aware of the next level, so to speak, and that means on a daily time frame chart, we want to understand what's going on from a weekly standpoint. If we take a look at Stevie's white background chart, the Ninja Trader charts out here, what do we know? We know that Goldilocks generated Rhodes momentum indicator topping signals. We got 3 bearish reversal candles as price continued to try to push higher. Boy, if anything was telling you that sellers were flexing their muscle, that they were putting up a significant level of resistance, this was certainly it. Now what we've got a close below the daily bottom of its box out there. And what that sets up here, Peter, is a pullback to at least 1412.10. Now it's got to be one step at a time, meaning that daily level of support has to close below that in order for price to be able to get down to 1412.10. But 1412.10 is the area, or the price area, where gold most recently broke out using our TD setup 9-count system. And so that would become the price target to the downside. I am not saying that if price closes below the weekly profile in gold, that that's going to be the end of the run to the downside. In fact, Stevie thinks just the opposite. Stevie thinks that what's going to happen here in gold, and the chart patterns are suggesting this too, by the way, that what we're going to see is one huge flush out to the downside, trapping the bulls like that will not want to be touching gold or the mining equities, and that will be music to all of us out here in the Tiger Nation, so to speak. But look, we got to take this stuff one step at a time. The first step is the mere fact that price is trading below a key level of support. If there is a second day close below that level, 1508.40, we're looking at the December contract right now, that's going to just simply communicate to you and I that that there is a change in trend inside of Goldilocks. We'll just have to watch the patterns as price moves lower. So, Peter, that's what I see when I take a look at gold. Now, back to the question earlier as we go into the break. What existed this morning to give you a signal, if you're an intraday trader out there, as to what the markets were doing? Really a couple of things. One, if we take a look at the NQ as an example. In the NQ, and we want to do this because we know that Apple is, out releasing whatever new things they've got, phones, TVs, this, that, or the other. So I want to go ahead and focus just on Apple and on the NQ 30-minute chart. The ES did the same thing. The Dow did the same thing. It's just that I'm going to be flipping over to Apple here to take a look at what it's doing because of its weighting inside of the NQ out here. Now, what we can see is that price was pushing lower, doing less relative energy out here. That's what it was doing at 10:30 this morning. Very similar to when it made a high out here at about 8 o'clock in the morning on yesterday. It might have been yesterday out here. Today's Tuesday. Yeah, it would have been yesterday. Well, it could have been Friday. In any event, out here, these are great bottoming patterns. Now, they're great bottoming and topping patterns when you use the tools, and those tools would be understanding your bullish and bearish reversal candles, understanding your TAS market profiles, and understanding Stevie's red/green line. Well, sure enough, as price was pushing lower, let me get my cursor out here. Right here at 10:30, you got the signal that the bulls were ready to defend that position. How? Because they generated that piercing candle. Now, it was important that the piercing candle was being formed as price was being stretched beyond its means because the move lower did not have the appropriate strength behind it. It was weaker than the move lower that occurred at 2:30 in the afternoon yesterday. So that move lower in the game of liar's poker was like you could read your dollar bill and your friend's dollar bill on each other's forehead. You knew you were looking at the dealer's cards out here, the dealer being the market out there. And hence what took place is we saw a rally. Now, we haven't seen a breakout of the rally. We've seen a counter trend on a 30-minute basis. What do you mean, Steve-O? Well, very simply, we use that TD setup resistance line. That's at 78.2875. That's what you would be looking at. If you see a close above that level today between now and the end of the session out there, what that's going to tell you is you should anticipate either this was a significant bottom out here, or what you should anticipate is a further rally. But one way or another, any move above, any close above 78.2875, and what the NQ wants to do is to continue moving higher out there. Now, the NQ, we talked about this kind of ad nauseum this morning, but we still need to talk about it, is if we take a look at what it's doing, the same as the ES Mini, it was signaling to us a couple of days ago that we would see a sideways-ish market, maybe a market pullback, because Stevie's red line on the daily time frame turned green. And when that happens, we will usually see price and that line catch up to each other. Now, we got very close this morning. In fact, if price continues to move higher, this line, just because of the mathematics, will also start to move higher, and it may look like tomorrow that there was actually a valid test. So it's very close out here. Well, that then takes me to Apple. And so then I had to say to myself, okay, what's Apple doing out here? And we take a look at the Apple chart. Here's the daily time frame chart. It was pushing lower this morning, but what was it doing, folks? It was doing nothing more than pulling back and testing Stevie's green line. This is not a moving average out here. This is an extraordinary tool. I teach folks how to use it. Just subscribe to Mastering Probability. It is an extraordinary tool for helping you to understand what the market is communicating to you and I. All that the push lower yesterday and today in Apple was doing was just testing support. And support has held. And inside Apple, that's 211.85. And until there's a close below that, you're going to see a higher high today, tomorrow, or Thursday. And that says higher highs in the NQ too. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we were taking a look at an Apple chart before we went to break. We know that a price this morning was doing nothing more than testing a key level of support. That held. We take a look at the constituents, the components inside the NDX 100. If you focus on the upper right-hand panel of my screen, you'll see 4 dials, a weekly, daily, 240-minute, 4-hour, and the 60-minute. You'll see that each of those dial levels are not in any kind of the red zone. There's a different red zone than the NFL, but it's still just as an important red zone out here. None of them are in the red zone. What that means is that market breadth for the NDX 100 is bullish and positive out here. If you take a look at the 60-minute time frame out here, what you will see is we've had a few crossovers back and forth. Just a few crossovers back and forth. If you look at the daily time frame out here, you'll see that it is bullish. Bullish from the standpoint 61 of the 100 plus constituents are trading above the top of their box, only 24 below the bottom of that profile. So all this is telling us, and if we look at the S&P 500, it is market breadth positive for each of its time frames as well. Everything in the green zone out there, that means that things are bullish. So that's a take of what's going on inside of Apple, the NDX 100, the short-term time frame charts and the signals that they were providing us. By the way, for the ES Mini, for its 30-minute time frame chart, it would say that there's more than a counter trend rally with a close above 2977.50. That's where price had recently broken down. We know that price level was tested. It was tested at 7:30 this morning. So 2977.50 is a real key level. If you see the ES Mini closing above that area, expect more of a rally to continue. And that rally, quite frankly, would take price all the way back to, well, all-time highs out there eventually, not by tomorrow. And the reason is because if we take a look at what we've got here, the other thing that the NQ is doing is the NQ is testing the breakout area. The breakout of its daily box. Well, when I say daily box, Stevie's rectangular consolidation level out here. The Russell 2000 has broken out of its consolidation and is trading above the top of its daily profile, just as the Dow equity futures contract is, and it has its sights set at 1604. That's the measured move of the breakout. Inside the ES Mini, it's 3071. Inside the NQ, it's 8235, and inside the Dow, the number is 27,548. That's the way that things look now. And if something changes, then we'll use that information to go ahead and make a different market call. But that's not what we have. Right now, the market call says, if we take a look at the spot volatility index, cementing itself well below the 50-day exponential moving average, and it will, or it should, continue to head lower over the coming days. And over the coming days, that lower area should take you into the $13 range, $13.10 as we speak right now. If that is, in fact, the way that the spot volatility index unfolds, the markets will move higher. If we take a look at the New York Stock Exchange, it has net positive market breadth today, net advancing issues. Its advanced decline line headed up to the 150 level. If we do see a close above 150, that is bullish as well out there. So all of the signals, market breadth, New York Stock Exchange, which covers a large market swath. S&P 500, NDX 100, daily, weekly, 240-minute, 60-minute time frame charts are all cautioning you, whoever yous are, on being on the short side of the market. And I'm really not referring to intraday traders out there, although intraday traders need to be cautious in taking those scalp trades and being able to identify where there will be or where there can be bounces. And using that Rhodes momentum indicator pattern and signal out there will be of great value to you. So we have another question. We've got a couple more questions that have come in. One from John in Sarasota. And John says, hey, Steve, is it time to get out of Mercado Libre? MELI is the ticker symbol. So let's go take a look at that for John. Here's what we know, John. We know that right now, price has pulled back to the bottom of its monthly profile. That's support. So I could not suggest that you get out now. Granted, yesterday, price closed below a bullish structure of its bullish structure daily profile. The bottom of that box was 576.48. But we also know that price is pushed right down to the bottom of its weekly profile. That's at 536.04. The actual low so far has been 538.01. I couldn't with any integrity suggest that you, if you're in a long position right now and you've held it, that you would exit now. If you see it close below 536.04, specifically if you see it close below that on Friday, that would be suggesting to you and I that there's a lower price movement underway. Price movement to where? Well, on this set of charts, we would just say 407.71. Why would we say that? That happens to be the bottom of its monthly profile, a new profile that formed here in September. If I look at the daily time frame chart out here, do we have any signals of anything? I really don't. When I say I really don't, I mean I really don't. We can see that 518.58. Now we're not going to use that. We're not going to use that level. I don't have any sign of a bottom, but I would not tell you to exit with price being so close to the bottom of that weekly profile. If I look at the weekly time frame chart, what do we have out here as far as signals are concerned? This is going to be week number 5 of a TD setup 9-count pattern. We don't know if that pattern is going to come into play. Won't know until we get to bars number 8. So that's not for 3 more weeks from now. If this is a time period where you should get out, meaning to close below the bottom of that weekly profile, that brings into play 315.73 inside of Mercado Libre. That is where price broke out from a weekly time frame. So, John, my answer to you, pretty simple. No, don't jettison just yet, but watch 536.04 like a hawk. Kay writes in and says, I'm looking to short BKNG. BKNG. So let's go take a look at BKNG. BKNG is Booking Holdings, a high flyer out there. All right, well, if that's the case, we better find a really great pattern in order for Kay to go ahead and put that money at risk. She said, can I give her the support and resistance levels? Well, we can. So if we take a look at initial support and resistance levels, there's no resistance on the daily time frame because price is above the top of that box, 1958.15. If we look for resistance levels on the weekly time frame with regard to TAS market profiles, there ain't none there because price is above the top of that box, which is 1899.80. And then if we look to the monthly time frame chart, this monthly profile formed back in May. It is still in place, but this is the first time on a monthly basis we're seeing a close, or appears to be a close, above the top of that profile, 1978.16. So everything is above resistance. Everything is above resistance when we take a look at our daily and weekly and monthly TAS market profiles. If we take a look at the daily time frame chart to look for other pattern signals for us, you can't do it now. This may be forming a TD setup 9-count. Doesn't look like it will be today. When I say today is going to be bar number 8, but it's not a bar number 8 that could identify a high, because what we need to see, or what Booking Holdings needs to do in order for that to even be a potential topping pattern, is you must see a tick above 2010.94, and you're at 1999.81. So perhaps there's going to be some type of sellable high. Boy, I'd sure like to see some other pattern other than just the TD 9-count. But that says stay put right now. Today is not the day. And that's what I've got for you, Kay. Hey, that rhymed. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go out to Overland Park, Kansas, and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you today?
I'm doing great. Thanks for taking my call.
Sure, my pleasure. Thanks for calling back. So I think we were talking about the TLT yesterday.
Yes.
Okay, and I probably said, "Hey, call me back tomorrow. We might have more news for you." So we do have more news for you.
Okay.
Yeah, so you're considering taking a short trade in Treasury bonds?
Yes, by buying the TBT instrument.
Yeah. So you got your message here. When I say you got your message, let's start off by taking a look at what the 30-year Treasury bond has been doing. And yesterday, what we received, so price had been moving higher, doing less relative energy. Yesterday was a bear sash candle. That was a confirmation of the top that formed out here on August 28th. And what this suggests to you and I is that the 30-year Treasury bond wants to head down to the 153, 27, 32nd area. Now, today is going to be bar number 5 of a potential TD setup 9 count. You have to be careful because on bar number 8, 9, or 10, it could form a bottom enough for at least some type of counter trend rally. But that would at least say that we should see lower price inside the 30-year for the next several days out here. Not a guarantee, but we should see that. And the other thing that we have is that price broke through a key level of support when we take a look at it on the daily time frame. The other reason why taking the TBT might be a good trade is that we're now starting to see, in the case of the 30-year Treasury, we're starting to see price trade below Stevie's green line. This has acted as a key level of support. Now, the week is not over until Friday, Robert, so this call here is a bit early, so to speak. But if you were to see a close below 161 this week, it would definitely be signaling that what the markets are communicating to you and I, that their intention over the longer term is to head lower out there. So the signals that you were looking for, that we were discussing yesterday, they've taken effect out there. The key question is does price find support at 161? And if it doesn't, price wants to head lower. And that lower could be as low as the 146 area. I gave you a different number of 153.27. Those would be the two areas that I would be looking at. The other thing that you've got going for you to suggest that this is a longer-term change in trend is the fact that last month was the 9 count of a TD set up 9 count. So based on what we are seeing transpire so far on the daily time frame chart, given a topping signal, taking out support, the weekly headed down towards a support level, but trading below one of the key levels, Stevie's green line. All of this is suggesting to you and I that the 30-year Treasury wants to move lower and rates higher.
One additional follow-up question: do you cover the Treasury in your newsletter?
Every day, every morning. It's one of the Timer Digest calls out there, and one of the others. So inside the newsletter, it will show you, in essence, this black background chart. Which, as of, within a half an hour of the newsletter being sent out, it will show you exactly what the profile levels are, daily, weekly, intraday time periods. I also show what's going on a short-term basis, a 30-minute time frame chart with all the TD, or not all, but the last 4 TD setup 9-count resistance and support levels. Support are the red lines out here. Resistance are the green lines. When counter trend rallies are unable to take out resistance, that's communicating that price wants to continue to move lower. That current resistance level inside of the 30-year would be 162.24 out there. I can say, that the 30-year Treasury is signaling to us that we may see some type of counter trend rally begin to unfold as we come into the 2 o'clock hour. And the reason is that when we take a look at the 30-minute time frame, we know that this formed bar number 9 as we came into 130. And a lower low could form if this is a pattern that's going to identify a turn, a bit of a change in trend that could take price up to that 162.25 level. It's giving us that signal. So now would not be the time necessarily to take that trade. Maybe you would, and especially if you see that bounce and the 30-minute chart is giving us that signal, but because you're trading the TBT and you're going to be doing that during regular market hours, you could begin your position as you come into today's close. But yes, I cover the 30-year for multiple time frames so that folks that are trading this can use these numbers as signals to make their trading decisions.
Thank you. I will sign up today.
Hey, sounds great. And thanks so much for calling.
Thank you. Bye-bye.
You bet. You bet. That was Robert in Overland Park, Kansas. And so now we've taken care of the 30-year note out there. The other thing that is going well from the seller's standpoint with regard to the 30-year note is that we've got sellers in all of the major currencies. So when you've got, and this is the, of all of the technical tools that you and I look at each day, and I mean of all of them, and look, I'm always out there reading, looking at new things, testing out new things, things along those those. I mean, my knowledge now is way more than it was a year ago, and certainly 10 years ago out here. And sometimes, and so the coolest tool, and the great thing is that I found a way that eSignal actually allows me to do this. Takes a look at, I can take any instrument and take a look at how it's trading for every currency. Now, there's 160 of them. If I put 160 currencies and how things are trading on this screen out here, we'd get dizzy. So we're just taking a look at the major currencies right now, the euro, the yen, the pound, and obviously the U.S. dollar index. And when something is moving lower in all those currencies, it's telling you the buyers are gone, that the buyers have turned into sellers. You just look at it on the screen on the chart out here. So breaking through the key level of support out there, the bottom of its profile, using Stevie's other tools out there where breakouts begun, this is what this is where it is easy for me to say to Robert, hey, look, here's what the charts are communicating to us right now. If something changes, then we go ahead and we take some different action. But right now, as we go through our checklist of items to look at, has support held, what's going on with this as far as somebody sitting over in Tokyo, somebody sitting over in Paris, somebody sitting over in the UK. They're sellers. They are sellers right now in their currency. They're not buying the long-term debt. All righty. So what else do we want to look at? Oh, I know that there's plenty of other questions that have come in, so we've got to go to those questions. Lee writes in and says, hey, Steve, I'm looking to establish a longer-term position in Bitcoin Trust. GBTC is the ticker symbol. So let's go take a look at this. Can I give you my take on a good entry point? And this one is out of my wheelhouse. And the reason is because I just don't have great updated charts out here. Now, let me give you at least this following information. GBTC, let's do the whole thing. Here's your daily set of profiles, your weekly set of profiles, your monthly set of profiles. Price below the daily set of profiles, the bottom of that box was $12.43. This would say an entry point could be between 1062 and 1127. That's the top of the weekly box, and the center of the weekly box is a bearish structure. You wouldn't want to see GBTC get below 1062. For if it did, it would tell you 669. But here's your profiles. We come back from this break, we'll go take a look at the futures contract, because that's really the underlying instrument out here, and I just don't get confident enough data to be able to assist you with the patterns that are unfolding inside of Bitcoin. I wish I did, but I don't. But we'll come back. We'll take a look at what I do have in just a few moments.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Lee, who's trying to establish a position inside a Bitcoin trust. Lee, here's what I see when I take a look at the Bitcoin futures contract, and that price is trading below Stevie's green line out here, 94.70. 94.70 is a key level of support. It's where the most recent breakout began using the TD setup 9-count pattern. We can see that this area was tested several different times, and it's held. So with price trading below Stevie's green line, says that there's further retracement likely, and if that occurs, you should find support at 94.70. That's where I would begin building your GBTC on the next test of that area using the Bitcoin futures contract. I hope that helps you out. That's the best information that I have available to me. To finish out the show, let's go to a question here from Alex. Alex writes in, hey, Steve, did the S&P make a short-term bottom also? So that was Alex's question regarding, we were looking at 30-minute chart for the NQ. I believe I covered that, but we did see a Rhodes momentum indicator bottom. Did it form a short-term bottom? The way that I would answer that, Alex, is if price closes over 29.7750, that's where price recently broke down, then the answer would be yes. It formed a short-term bottom. If it didn't, if price does not get over that, then what we would anticipate and expect is this choppy sideways move. Now, recognize that on the 5-hour time frame chart, again, 29.6950 is held. That's the breakout support on a 5-hour time frame. And the 5-hour time frame chart has been providing wonderful, significant signals for tops and bottoms out here. This is going to be bar number 6 at 2 p.m. Bar number 7 at the close of the contract. Bar number 8 will complete at 11 o'clock this morning. And bar number 9 at 4. And by 9 o'clock tomorrow morning, we ought to know if there's a 5-hour time frame bottom inside the ES Mini. And I'll be doing the show live at 9 o'clock tomorrow. So that's apropos for us being able to answer your question with conviction. Alex, so thanks for writing in. And folks, thanks so much for being here, putting up with me for 2 hours today. But let's do that again tomorrow. But until then, stay tuned. Fabulous show coming up next by our favorite polar bear, David White, Tom O'Brien from 3 to 5, and I'll be back with you tomorrow morning to kick things off again. 9 o'clock sharp. Take care and have a terrific Tuesday.